Good morning, everybody. I'm Charting Man Dan, filling in for Chart Gal Lori the next couple days. She'll be back next week. She's out celebrating her 40th birthday. And so we are going to check in on the market in this video as we have a lot of follow through and strength from yesterday's FOMC reaction, and some gap ups are shaping up. So going to lay out what I'm doing as far as the direction I'm looking this morning. And I appreciate you all coming along for the ride. I got a space heater going here in the background, some white noise, because it got real cold last night for the first time of the year. Deep freeze. It's winter time. So we got gap ups. We know gap ups are not for buying. Whenever I approach the trading day, I like to break it down into four things, four perspectives. Obviously, you got bull and bear, but you got aggressive bull, aggressive bear, patient bear. And so I like to, as I've said many times, eliminate one side of the equation. Anytime I can go into a trading day and only be looking in one direction, that significantly helps me focus, and it also helps me from flip-flopping and over trading. And so heading into this morning, what's the approach? Well, we can go through all the different four quadrants that we just talked about. So what's an aggressive bull looking for? An aggressive bull is looking for an hourly higher low entry. They're not buying the gap up. They're waiting for any consolidation and saying, okay, SPY, anything above 419.08 is an hourly higher low. And I know that we can pull back 1% from the open and still be looking for that hourly higher low. So I'm going to be watching for that entry. A patient bull is looking for a daily higher low. They're saying, all right, we've got a big bounce. You know, the bulls have proven to me that we've gotten enough follow through that I'm confident that a daily higher low is the most likely result of next consolidation. So when daily consolidation takes place, I'm looking for an entry as a patient bull. So a patient bull isn't doing anything today. They're not doing anything until daily consolidation is underway, and then they start to enact their game plan. Aggressive bear is looking short on the morning. We know we often gap up into hourly consolidation. And so an aggressive bear is trying for a position for that pullback. And what an aggressive bear might be trying to do is looking for an entry on the morning, looking for a pullback, selling partial, and then trying to turn a day trade into a swing trade. And they're hoping that they can get a position that then leads into daily consolidation. A patient bear is waiting for a red flag. So if I'm a patient bear, I'm not going to short the open. That's an aggressive bear. I'm going to wait for a big enough pullback where I say, okay, bears are starting to show me something, and I'm going to scout the lower high, knowing that we must confirm an hourly downtrend for daily consolidation to be underway. So a patient bear is waiting for some kind of hourly pullback that's big enough to then scout the lower high. They're not trying to nail the top. They're waiting for some clues to then look for that play, that lower high. So again, every single day you can approach the day and break it down into those four things, and it's going to vary based on time frame. And so what am I? Well, right now I have, I exited some of my IRA hedge position into daily oversold conditions. I think it was last Thursday where I took some of that off. I've got a bull lean in my account. I'm not doing anything long today. What I'm doing is looking to see if I can find a spot to grab a bearish position for a pullback. And I know I'm not going to be sitting at the computer all day. I've got a couple things going on. So on the morning, I'm going to try and position where I can get a position for consolidation on the bear side of things. And it's essentially what I did yesterday. Yesterday into the FOMC on the morning pullback, grabbed a bit of a bear position, sold a bit of it, stuck my stop over the high of the day. If we have a bullish reaction to FOMC, I'm going to stop out, break even or tiny loss. It's a protection position in case we do get a bear reaction. And so I'm going to do that same approach today. Try and position where, if the bulls see a higher high after the morning, I'll probably stop out, but give myself a position for if we get that hourly consolidation on the gap up morning. So that's my approach for today. We're going to go into some names here in depth in just a moment, but approach bigger picture now. Let's zoom out. Again, we can compartmentalize so many things. When we're looking at the market as a whole with so many time frames and directions, it's very easy to get overwhelmed. But we've got our four quadrants. Now, okay, short term, today, longer term, next few days. I did a long-term live stream on Monday. That's on our YouTube channel talking about monthly, 3-month time frames. I'm not talking about that right now. I'm talking about the next few days, the next, into the start of next week. What are we looking at? Well, I'll tell you. The S&P 500 at this point, the bounce retracement is pretty significant. We're approaching 60% bounce retracement. And the last time around, we had a bounce retracement fairly in line with where we are now. So that tells us, okay, it's a nice bounce. We can drop to lower lows. We did last time. I'm not going to say that that can't happen. So I have to remember that's a possibility as well. One of the differences is we didn't confirm a daily uptrend on this move. We just had a nice big bounce, set the weekly lower high, failed the daily bull flag, and rolled over. And so that's why next week what's so key for me is, can the bulls on XLF, SPY, QQQ, can they confirm daily uptrends? So I'm looking for a top of this bounce to be set sooner rather than later. As we can see, our 4-hour RSI is now overbought. That's where we've topped out multiple times on this pullback over the last couple of months. And so I'm watching for daily consolidation. And then into next week, the big question is, do we confirm these uptrends? And so Nasdaq, everything that I just said is the same, except it's a bit of a stronger bounce. The retracement size is a bit more significant. We're already at maybe 62% retracement. Again, last time around, we did this. We had a big bounce to 70% retracement and still rolled over. Doesn't mean we can't go lower, but we got a big enough bounce to try and shape up these daily trend changes. And again, our monthly candle is only a couple days old, but I am looking for monthly higher lows in many names. And changing the daily uptrend to the bulls next week is the first indication for me that that's potentially shaping up. So again, try and organize your brain as much as you can in terms of the different time frames that you're looking at, the different directions you're looking at, and knowing that, what I'm doing today is very different than what I'm looking at 3 days from now as a, full-time trader. And maybe that's different for you. Maybe you only care about the daily chart, and so you're just patiently waiting for daily consolidation. The dollar is having a pretty hard drop. We're testing some support right now. And last week, or earlier this week, I suppose it was, I drew this 12-hour potential megaphone. Why did I draw a megaphone? We broke support with no follow-through. We broke resistance with no follow-through. As soon as I see that in each direction, I draw my megaphone. The support only has 2, well, no, take it back. There's 3 touches. So I'm watching this now. And if you're a metals bull, if you're a crypto bull, or an equities bull, you want to see the dollar weaken. And right now, we're calling it a failed initial attempt at a weekly bull flag. It's only going to be a really glaring failure if we drop down and break 105.36 and lose weekly EMA 12. But bigger picture, I'm looking for a 3-month lower high in the dollar. And if we drop down and break weekly support of 105.36, that's the first baby step towards a 3-month lower high being set. And I keep talking about the metals. Watch the metals into 2024. I think gold has a good chance of hitting all-time highs, a lot more likely to hit all-time highs than to fail, in my opinion, into 2024. And so if that's going to be shaping up a bullish metals environment where we can get some blue sky euphoria, the dollar's got to set that 3-month lower high. So I'm going to be paying close attention to the dollar the next couple of weeks, but the metal bulls are really liking the size of this pullback from yesterday, and they want to head down towards this support line into next week. Still got to confirm trends. We haven't confirmed. Well, there's a little 4-hour bear flag, but the metals themselves. So here's gold trying for a daily higher low off EMA 12. We're testing the high of yesterday, and it is a possible head and shoulders as well. So we're not going to rule that out. We have to keep in mind that we've come straight off the lows on that V-shaped bounce, fueled by a little bit of a short squeeze because of the geopolitical situation last month. And so open to the possibility where if we fail the recent high, it could be a head and shoulders. But obviously the bulls want to see a new higher high. And if we get that, we're going to be knocking on the door of all-time highs, like 3% away if we get that higher high. So new key short-term support for gold is 1969.91. And if that level breaks, we can say, all right, weekly consolidation is likely shaping up. So that's my benchmark for whether weekly consolidation is likely shaping up or not. If it's holding, it's not shaping up. If we lose it, it's shaping up. Silver, really nice daily equilibrium here for clarity. High, low, failed resistance, held support. Here we are smack dab in the middle. This can definitely continue tightening up for another few days into next week, possibly. So again, another one to be watching closely. Essentially, the metals are going to tell us in the next few days whether it's time for weekly consolidation or whether the bulls can keep the pressure on. Miners, same deal. They're weaker than the metals, but they're trying to shape up this weekly inverse head and shoulders. Again, it's just one time frame on the other. So I'm anticipating that a miner's 3-month higher low is more likely than not for a continued tightening range. So I zoom in and look for something that is showing me that a bullish pattern is shaping up to try and shape up a 3-month higher low. So I'm looking for something to affirm or deny my thesis of a 3-month higher low. And I look at the weekly chart and I say, all right, if that's going to be a 3-month higher low, then this is going to be a weekly inverse head and shoulders. So bulls need to shape up the weekly higher low. The senior miners, GDX, are weaker than the junior miners, GDXJ. GDXJ has a double bottom at this support, where GDX had a clear break to lower lows. So again, I'm paying very close attention to the metals and the miners into 2024. Oil is knocking on the door of confirming a weekly downtrend. 3-month time frame for oil, we could be setting a lower high in a tightening range here. This is the December futures contract. If we confirm the weekly downtrend, that's the first step towards a 3-month lower high and a longer-term tightening range. And another reason, it's almost like the energy sector for me is making me more bearish oil. And the reason for that is, talk about that in just a second, but oil needs to break 80-20 to confirm the weekly downtrend. Why I'm bearish the energy sector is, again, there's no sector out there that I'm aware of that has a 4-month stair-step pattern still going. And this has been going for years at this point, over 3 years. Yep. Everything else saw the 4-month consolidation in 2022. Most everything else. So, okay, if we're going to be shaping up 4-month long-term consolidation, I have to zoom in and show me that there's a pattern, a bearish pattern, telling me that that is shaping up. And again, it's this monthly potential rising wedge that I keep talking about because it's shaping up. And if oil confirms the weekly downtrend, we're going to be looking for the energy sector to break this bearish. And it's right now a potential daily bear flag. And so I like the setup here to say, if and when the S&P 500, not if, when the S&P 500 tops out on the current bounce, this 3-4 day bounce, and we start daily consolidation to try and shape up the trend change, which is what we're going to be watching for into next week, the energy sector bears are positioned well for a daily bear flag. And so if the energy sector confirms a daily bear flag and breaks 84.09, and really after 83.98 here, so we have a little support zone that we are testing. You can see how many times we've set or touched this here in the last 3 months. 1, 2, 3, no, not that one, but 3, 4. So we're trying to hold this level. If we lose it, there's some gaps down here, 83.72, and that's when we start to weaken significantly, in my opinion. So as far as a bear focus, I'm watching the energy sector. Natural gas continues to tighten up in the beautiful equilibrium. Again, this was the most likely scenario. As soon as we see, okay, we got the big drop, we can't assume an equilibrium is most likely. As soon as we get the big bounce, we assume the equilibrium is most likely. You got to have the volatility in both directions. And I guess you could say we had it here, but I wasn't looking for it until we had that big bounce. And so then we had the pullback to a higher low, and then we failed resistance. And so now we're looking for another higher low compared to 332. We have the inventory report today, and this can easily tighten up into tomorrow or into next week. And then when it breaks, we'll look for volatility to pick up again. But at the moment, we're looking for constriction of volatility as the equilibrium continues to tighten. Bitcoin. So bull break, daily bull flag confirmed, and it looks very similar to gold. It's just lagging behind gold, essentially. So gold had the multiple week move up. The daily bull flag confirmed October 27th. Bitcoin, multiple week move up. The bull flag confirmed yesterday. Just took a little bit longer of sideways trading. My mindset is the same on Bitcoin. If 12-hour EMA 12 is support, the bulls have full control. Losing that will have me go back to all cash in any short-term positions because that will significantly increase the probabilities to me that weekly consolidation is shaping up. We know weekly consolidation is inevitable in crypto, but it's not happening if 12-hour EMA 12 is support. Right now, in the short term, 4-hour higher low is trying to shape up. And again, I've just been astounded at the strength in the cryptocurrency space over the last 2 weeks while the market was weak. Again, these names just going up hundreds of percent or 100%. Extremely impressive. And again, look at this name, Sushi. So Sushi has this huge move yesterday. Well, it's coming back to support, but I was very shocked that Sushi was able to find price acceptance at 109 after going, plus 60% on the day and having a very clear volume climax candle. But here we are back to testing that level now. Anyways, as far as crypto is concerned, we're keeping an eye on these crypto stocks, which are lagging way behind. They need IWM to show strength. Right now, the weakest bounces in the market, sector-wise, energy, IWM, still very weak. I look at this chart on its own. Bulls are not proving a thing on IWM. ARKK, bulls are not proving a thing in this growth ETF. Not a thing. So that has to change. And that is part of the reason that these crypto stocks are being held back. But they're going to gap up open today. And again, anticipating day trading volatility as long as Bitcoin has this volatility going. And the big question will be, can these crypto stocks break this sideways range that we've been in for 5 or 6 weeks to clear upside? So watching for that. But again, same thing as everything else. Gap up open. We're watching for an hourly higher low. We can watch for 5-minute oversold conditions to try and position for an hourly higher low if I want to be an aggressive bull. And as far as resistance on Riot, key level is 1137. That is potentially in play today, but the Bitcoin bulls would need to show up, in my opinion, if that's going to be the case. So we have some pretty solid gap up opens out there, as I mentioned. And, NVDA gap up open, it's been benefiting from AMD earnings, SMCI earnings yesterday. And so again, we are not long in gap up opens. It's poor risk reward, but we're watching for hourly consolidation on these gap ups. And again, if I'm an aggressive bull, I'm waiting for hourly higher lows, knowing that NVDA can open and drop 3% and still be looking for an hourly higher low. And again, this NVDA hold of 400 is important for the broader market, in my opinion. My simple statement is, if NVDA does not lose 400, then the semiconductors are shaping up a monthly bull flag. NVDA is a monthly bull flag. Again, it's going to take a while to play out. I'm not saying that this is the most likely scenario, but I'm saying that you need to have a game plan for monthly bull flags in QQQ, NVDA, SMH, just in case, because it's possible that they shape up. Again, I keep saying it, but as far as the Nasdaq, if you show me just the Nasdaq, I keep saying there's absolutely nothing wrong with this chart for the bulls. But I'm aware of everything else going on in the market. I'm aware of the weakness in IWM and all these other sectors. And so I take that into account and say, okay, the market isn't as strong as the Nasdaq is showing us. We know the Nasdaq is 7 major names mostly, but it's a bull flag. So I'm preparing for the possibility it's a bull flag, and I'm preparing for the possibility that the weekly downtrend continues to negate the bull flag. But the burden's on bears to prove to us that QQQ is not a bull flag. And look at Microsoft. Bullish reaction to earnings, that's a monthly bull flag. I'm calling Microsoft our bellwether, because if anybody's going to confirm a monthly bull flag, it's going to be Microsoft first. It's 5% away from all-time highs and confirming a monthly bull flag. And so if Microsoft can't do it, nobody's going to do it in the Nasdaq, in my opinion. But if Microsoft does it, that's going to increase the probability that Google's a possible bull flag, that QQQ's a possible bull flag. So I'm using Microsoft as a bellwether. Again, I know a lot of people don't think it's a possibility to be a monthly bull flag, and I understand why. But again, we just have to have game plans for when we're wrong. We're wrong all the time as traders. We are wrong all the time. And so we just have to ensure that we're not tunnel vision. It's important to have conviction, but it's important to not have tunnel vision. We need an invalidation level that says, oh, I was wrong. And so, again, I'm just wide open to a Nasdaq monthly bull flag and wide open to a Nasdaq 3-month longer term tightening range through 2024. And every day we're getting a bit more information about which is most likely. TLT initiated my first long attempt of the year yesterday, and it's going well so far. We'll see. Wow. All right. That's nice. Looks like some data, 8:30 a.m. I forgot we had the employment numbers here. Bulls keeping full control on the employment numbers reaction from right when I started live streaming. TLT's loving it. Why did I long TLT for the first time this year? Because we confirmed the first daily uptrend in 3 months. I wanted to find a point where I could say the character of the chart is changing. It's different than it's been the last 3 months. And that has now happened. And 88.17 is the next level. And my target is to take partial profit at weekly EMA 12 resistance to get risk-free. I want to get up to weekly EMA 12. I want to sell however much I need to of my position to have a break-even stop under 82. And then I either nail a long-term bottom or I stop out and don't lose $1. And so that's my game plan for TLT. But already the bulls are loving the follow through. And again, we can clearly see things are starting to shift a little bit, but still a lot of work to do on longer term time frames. And it's the 10-year giving us the first confirmed. When's the last time the 10-year confirmed a clear daily lower high and lower low? I would say it was back here in August. So again, September, October, August, 2 months. This is the first time in 2 months that the 10-year has given us this clear daily downtrend on the daily and is pulling back on the weekly. And I'm looking for this monthly stair step on the 10-year for 6 months in a row to lead to some monthly consolidation if this trade is going to succeed. We'll see. We'll keep checking in on it. How much time do I got? Just a couple more minutes here. I'm about to go on a crypto channel after this. Scott Melker's channel at 9:30 is when I usually go on there. Let's see, what else I want to cover here. Wrote it down. So again, Tesla, nice big gap up open. There's definitely some trap bears on Tesla. I like monitoring social media and people buying Tesla puts, anything over 200. And here we are putting those bears underwater real quick, but it's all about 222. Bulls are hoping for a big enough move to shape up a daily inverse head and shoulders. Tesla has more work to do than other names that we've just looked at because its daily bounce started yesterday, whereas the broader market has been bouncing for 4 days. So Tesla's trying to play a little catch up here, but they have a bit more proving to do. PLTR earnings reaction, bullish. And we just got over daily resistance of 1693. 1844 is the big level here. And I like this tightening range. Go to the 2-week time frame. Just condense it down. High of the summer AI euphoria. Low, lower high. And now we're shaping up a higher low. And so we're watching for this 2-week tightening range to continue tightening and give us a break in November or December. And that break is going to be an attempt at monthly continuation, but definitely a solid bull reaction. Keeping in mind, anything under 1844 is just a weekly lower high. But again, I like that 2-week time frame, and we'll see if we keep tightening up. I still have an AI position. I have not liked how AI has traded the last couple of days, but my stop is under 23. Wow, I didn't realize yesterday we got that close. Stop is under 23, risk-free. Again, took some partial profit into a big green day back there. And I've got to see AI make its way back up towards 26. But I'm just going to let it play out. It's either going to stop me out, break even, or it's going to get a bull break. And I'm going to give the bulls their chance. They're gapping up this morning. So the daily bounce is underway, but bulls have a lot of proving to do there. All right. I'm going to wrap it up. I appreciate you tuning in. Dinzy is going to be live streaming here for Chart Guys members in 5 minutes, so I'm going to bid you a fond adieu. Do good things.